can I not? Because I don't think I quite understand a write-off.
Okay,
right?
Can I explain it?
Please.
Okay, for sure. So guys, a write-off is anything that is ordinary or necessary to operate your business, right? So any money that you spend that is attributed to your business, and the dope part about that is a lot of your personal expenses become business expenses once you start a business. So for your cell phone, right? You use your cell phone in your business.
Yes.
That's a business, that's a tax write-off. That's a business deduction. You take that amount of your cell phone, subtract it by your income, right?
What about my drip?
I'm gonna teach you how to write off clothes. I'm gonna teach you how to write off clothes.
Okay.
I got 4 strategies I want to teach your audience. That's gonna change your life.
Okay.
But before that, understanding a write-off is very simple. It's just any expense that's ordinary and necessary for you to operate your business. And when you think about it, you're like, yo, I need my car to get to business meetings. I need my internet. I need to use my computer. All these Apple Watches, you can check your email on the Apple Watch. You can write that off too. So just understanding before I spend any money, I ask myself the question, is there a way I can write this off of my taxes? And 90% of the time it's away. Really?
Mm-hmm. See, somebody was telling me it's not, you can't do all, for one, a blanket statement, no, you can't write off clothes.
They're lazy. You said, what's the question?
I'm going to say their name.
Okay. most accountants and CPAs are lazy. All they want to do is just do your taxes and get you out the door, right? I'm a tax planner, right? And if you take care of business during tax planning season, you don't have to worry about things during tax paying season, right? So the goal is to get somebody that's going to help you understand and strategize on instead of saying no, but how can we make this happen? You know?
Okay.
So do you want me to teach you how to write off clothes?
Come on.
Since we're on it?
Let's do it.
So this is Melon the Millionaire drip, right? You like it?
It's drippy.
It's drippy. So basically, the IRS used to say you cannot write off clothes because unless it's a costume, you can't write it off. But if you get your logo visibly stitched on your clothing, you're now a walking advertisement for your business. That could bring more business back home. So if you get your logo visibly stitched, what the IRS says, you can write off the cost of the clothes, the stitching cost, and every time you take it to the cleaners. Right?
If I get a Louis Vuitton hoodie.
Here we go. I knew that was coming. Every time.
Let's just say.
Every time.
And I take it to my embroidery and I get the logo, my social proof logo right here.
So here's what I say. Ordinary and necessary. I don't think there's nothing ordinary about Louis Vuitton. Right? So I don't recommend people try to get their name put on luxury items. But like a Nike jumpsuit, Nike tracksuit, a nice blazer, you know what I'm saying? You can get your logo put on that. But I wouldn't go luxury. You might get away with it, but I don't want you to try that one.
Okay. Here's the thing.
Okay, let's talk about it.
I got this watch, right? And I want to write it off, right? What if I did a podcast episode on watches and I got the watch so that I can be in the conversation of the podcast episode?
If Rolex was a sponsor, then yeah, because now that is actually bringing revenue into your business. You can track it.
If Rolex is a sponsor.
Because you're now wearing that in promotion of a business activity that can bring in more business to your podcast. So it's all about creativity.
Right.
It's about thinking of how
being legal.
It being legal, right? It's about how can I make this a tax deductible expense based on is it bringing revenue to my business or not?
Gotcha. Give me the most monumental, or maybe just a memorable situation that you had, maybe with a client. You got to say their name, right? But a situation they were in that was really messed up. And how did you get them out?
Got you. So, do you know what an S Corp is?
Yeah.
Okay.
Explain that. Okay. First off.
Got you. So guys, this is very important. This is probably gonna save you $100,000 off the rip. So if you have an LLC, right? A basic LLC, all money that comes through your LLC, you have to pay 3 types of taxes on. You have to pay federal, which is about 25% on average, state, 5% on average. But self-employment, the FICA tax, like the Social Security, that's 15.3%. So you add all that up, that's 45.3%. So if you make $100,000, you gotta give $45,300 away to the IRS, right? If you have an LLC. If you have an S corporation, you can't do nothing about federal and state, but you can save on FICA because here's how it works. If you have the same $100K, you only pay FICA on the salary you pay yourself when you have an S corporation. So if
say it one more time.
You only pay FICA taxes, right, on the salary that you pay yourself from your S corp, right? So if you have that same $100,000 and you paid yourself a salary of $30,000, you only have to pay that 15% on that $30,000 instead of the whole $100,000. So now $70,000 is avoiding FICA taxes.
See, here's the thing. I'm getting different things from different CPAs. Some CPAs say, like I was talking to my man Jay, and he said he does all LLCs.
Okay.
and there's some way he does it and it saves taxes or something like that. Then somebody else says you need to, okay, you can have all these LLCs, but you file elect S Corp or something like that.
Yeah, so here's a basic understanding. If you have an LLC and your net income is $50,000 or less, an LLC is perfect for you. $50K or less net profit. That makes sense? Anything over that, you need an S corporation because it's going to help you save tremendously on self-employment taxes.
Am I filing it as an S Corp? But I have like a bunch of LLCs, right? But are you saying I have these bunch of LLCs and I'm filing all of these LLCs as an S Corp? Or all of these LLCs should be all S Corps? Because I got different businesses.
Yeah, you know, it's an easy strategy to do. This is game right here. If you have one S Corp, right? And it owns all your LLCs, all of your money comes into that one business, and then you have to do payroll one time. Right? You do payroll one time for 30%. That's a good number of all the money your business made. The other 70% avoids FICA taxes. It's confusing?
Now I'm processing.
Okay.
But you still got to do returns for each LLC though, yes?
Yeah, but it's a lot easier on paying yourself. So I can give you a better example because I don't want to confuse you.
Please.
Okay, so you heard about the whole G-Wagon car write-off thing, right?
It's over 4,000 pounds.
6,000 pounds.
6,000.
So here's the thing. I just bought a new Mercedes-Benz AMG, right? The car was 120 grand. Because the car is over 6,000 pounds, the IRS will let you write off 100% of the value of the vehicle, even if you don't pay for the whole thing in cash. So you can go to the dealership, finance this car with $10,000, right? You get the car, you get $120,000 write-off the year that you get the car. So now it's lowering your taxable income by $120K.
Hold on. Let's say I get a $120,000 vehicle this year.
Yes, sir.
But I didn't pay the whole 120-something thousand. I paid $10,000. But I made $1 million, let's say.
Yep.
Or $500,000. Let's use $500,000. Let's use 200,000.
Okay.
200,000. We made $200,000. I can write off $120,000 of this $200,000 and only have to pay the $80,000 and I'll pay tax on the $80,000.
Exactly.
Are you sure?
I'm positive. This is what I get paid to do. And then that's just one strategy, but I'm
about to buy a truck.
I mean, why not? So I tell people. So here's what I tell people this all the time. Do you know there's 2 tax seasons? Most people think it's one, right? There's tax paying season, then there's tax saving season, right? Tax paying season is January through April. After the past year closes out, there's nothing much we can do. We can't go back in time. But this last quarter of the year, you need to be doing tax planning. So buying cars, doing all these things so you can lower your income by December 31st. I can get that thing down to 0. That was just one strategy. And so now...
What about buy a building?
Yeah, that works as well. So you want to explain that?
Yes.
Okay.
Yes, explain it. Yes.
So real estate is so dope because it's the most tax advantaged investment that you can ever have. Because it's something that's called earn in pocket, lose on paper. So the reason Donald Trump doesn't pay any taxes is because he earns all this money in real life, but he gets to write off everything on his taxes. So let me break down the biggest tax for real estate is depreciation. So if you get a real estate building, right? Say it's $500,000. You get a depreciation deduction of whatever that $500,000 divided by 27.5 is. That's $18K. $18K.
Why is that?
Because the IRS says...
Ain't no way you that good, bro. Hold on. Ain't no way you that good, bro. Hold on.
The IRS says that since your property's going to lose money in value every year, we're going to give you a deduction for your property losing value.
You said 500,000 times what?
Divided by 27.5.
Divided by 27.5. By 27. Hold on. I don't know if my calculator can do it, but that's right?
Yeah. Because it's my property, so I thought I know it's right. I own a $500,000 property. So this property makes me $1,500 a month, which is $18,000. So I'm earning $18K, but my depreciation is $18K, so it's wiping out all my income. So I don't have to pay any taxes on that real estate income that I have. Isn't taxes fun? Like, taxes
still not fun because I still got to pay some stuff. Well, until we get this together.
Right.
So that's why. Okay. So I need to get my stuff together. Are we close? We almost ready to like get it? Because I need to know. Close. Okay. All right. Because this is scary stuff, bro. Like, there are people that go to jail for this.
No, for sure.
And not even out of like trying to cheat anybody, just negligence.
Just negligence, right? So that's why I love teaching it so much, because I want to give people the comfortability of over something that scares them so much, right? And I want them to be so comfortable they can start having fun with it, right? So like you said, like I brought up buying a car, your ass lit up, right? What if I told you I can help you turn every vacation you take into a business vacation?
Proceed, Carter.
Proceed? Okay. So this is my favorite concepts. It's called wrapping a weekend, okay? So let's say you and your boys going to Miami Saturday and Sunday to get lit on the weekend. Somebody's birthday. That's a 100% personal trip, right? Mm-hmm. I would advise you, instead of going on Saturday and Sunday, I want you to fly in on Friday and I want you to leave on Monday. And what I want you to do while you're in Miami, I want you to find some business activity while you're in Miami. The business activity can be anything. Taking a client to lunch, taking a prospect to lunch, going to a conference. I go to eventbrite.com and just find a networking event in my industry, right? So I'll go find like an accounting networking event. So if you find business activity that Friday and that Monday, the IRS doesn't care what you do over the weekend because you have to be there for those 2 business days. Therefore, they'll let you write off the flight, the lodging, and the meals that you have over that weekend.
Wow.
Because you had to be in Miami for business activity, right?
So how do you track it?
Yeah, so one thing I would do, if you, let's say you got friends, you probably got friends in Miami, right? Yeah. Business partners. Take them to lunch. Keep the receipt. On the back of the receipt, write who you went to lunch with and what business activity was talked about. Do that same thing on Monday for the next person you take to lunch. And then you have legit documentation that I had to be in Miami to meet with this partner to talk about this business strategy on Friday and on Monday. And therefore, the IRS says, hey, we don't care what you did over the weekend because you have to stay, go have fun. We'll let you write off the flight there, the lodging, and the business meals.
I think that's my challenge in terms of keeping the receipts.
Do you use like a QuickBooks software or anything?
Yeah,
nope.
QuickBooks.
Yeah, so you just take a picture and then automatically upload it to QuickBooks in the moment.
Oh.
Yeah.